Do you think there's still a risk that the S&P could crash to 1,700 in the short term? Is there anything that would change your view here?
Yeah, I definitely have to start thinking about setting that target lower. That's what could change my mind. I mean, I'm not, to be clear, the economy is going to be awful in the second quarter, and corporate profits will be too. Earnings season is going to be a train wreck. So, if anything, where I could be wrong is that 1,700 is, I'm being too bullish.
Yeah, the thing on earnings, we got this question. Actually, this question came up the other 2 days ago when I think you got disconnected because you were going to New York. But you realize, I mean, we still have a couple more quarters of tough comps, right? I mean, it's like
the toughest comps in U.S. history.
Yeah, especially from an earnings standpoint, because you figure the move in commodities really didn't start till the end of the summer in 2014.
Yeah.
So that's getting up on maybe the end of Q3, but really Q4 was when you saw the first downturn. So then it wasn't until Q4 2015 that we were really going up against tough comps. So you have another 2 quarters of this.
Yeah, it's called the comparative period. So again, if you don't get what the comparative base effect is, or the comparative period, or what we shorten the acronym, we call it the comps. All of Wall Street, obviously, this is baseline stuff, but so I don't want to insult everyone's intelligence. But for those people that are really trying to learn to understand why the comps matter, or why the comparative base period matters, it's because there's this thing called mean reversion. So, in other words, when something goes super, really, really good, it cannot be comped. Like for example, it'd be really hard to comp the weather, the warmness of the weather in February in Connecticut next year, because it was obviously the warmest month, I think one of the warmest months ever. So again, when your comparative period, you have to report against what happened last year. You can think of this in many, many ways in life and in sports. I mean, when somebody scores 70 goals in the NHL, it's unlikely that they'd score another 70 in the year after that, unless your name is Wayne Gretzky. So again, you compare against some serious momentum, so what you start to lose is momentum against that comparative period. And the comparative period, as you can see on, I think it's on slide 17 or 18, where we show the S&P 500 earnings, you're comparing against the all-time high in S&P 500 earnings, all-time high. So that's why I say it's the hardest comp in U.S. history.